Hey everyone, it's Tuesday, and that means it's time for That's Our Two Satoshis Live. For those who have never watched before, we do this every week. We talk about the digital assets market, we write about the digital assets market, and we talk about it. So if you want to follow along on the blog, you can go to our website, ar.ca/blog, and read the entire piece. Or for those who want to watch it live, here we go. And I'm joined today by Alex Woodard, research analyst here at ARCA, and I am Jeff Dorman, CIO. Alex, thanks for joining, pal.
Me.
Before we get started, quick disclaimer as always, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. So, Alex, there was absolutely nothing going on in the market last week. It was as boring as I've seen in 5 years. I was sitting around Sunday thinking, what am I going to write about? And fortunately, I didn't have to because the world of DAOs was interesting enough, and you had something to say. So, let's start with what's your overall take on DAOs? They working? They not working? Hit or miss? What's the story here?
I mean, definitely hit or miss. Kind of answer this question. I think you have to break down like what DAOs are meant for and what approach they're taking. So you really have two types. One is like a social channel, so pretty much people just chatting in a Discord, and the other is to manage some form of either public good or financial instrument. So you have typical DeFi DAOs. Social goods, whether they are not social goods, social channels, whether they may need a token or a DAO or just simply a Discord, I think those are working fine. But when you introduce financial instruments into it and with a token expect some sort of gain, I think there is a lot to be desired in DAOs currently.
Yeah, I mean, but let's. I mean, you must have some deep down, deep rooted interest in the success of DAOs because you've been with ARCA now for a long time. You've constantly gravitated towards these DAOs and some of the more interesting investments as well as social structures here. Like, do you see a future? Do you see something where this really ultimately works, or like I know you've written about it several times as well. Like what, like one or two things, your advice to anyone running a DAO or part of a DAO. How do we fix these?
I would say negative to neutral is how I tend to look at DAOs. Obviously, like everything in this space is what I consider early stage tech. You do need some form of leadership, or things just get lost in the process. And I think we've seen that over and over again with a lot of these DAOs that may have pretty large success in terms of the product they've built, but in terms of managing the product, managing the token, managing the community, there's still a lot to be desired. So in terms of like some advice I'd give, I think we have been so focused on replacing like traditional finance industry and replacing corporate governance that we stopped and we didn't take any lessons away from any of them. And so we're experimenting and running into the same problems that have already been solved. So we mentioned in this piece, like Rook, and we'll talk more about Rook, I'm sure, but we talked about how Rook has essentially created, in a way to gatekeep some of their proposals from passing. They have issued these people called siphons who are elected, and they will read and place a recommendation on each proposal before it goes live. Well, we've essentially created, well, with 3 to 5 of them already being core contributors to Rook, you've essentially created a biased ISS or Glass Lewis and like a board onto this DAO in just a way that doesn't make a lot of sense or really solve much of anything in my point of view.
Right. Okay. So let's talk about Rook. I mean, I know in the past, you spent a lot of time on Gnosis 3 years ago. You spent a lot of time on Sushi a few years ago. Last year, we talked about Fey Labs and Tribe and the dissolution of that DAO. What's going on with Rook? Why is this interesting? What's happening here?
Yeah, so Rook is super interesting for the same reason that Fey Labs and Tribe was interesting, is that it's trading at a massive discount to the treasury assets. So your book value per share is much lower than or is much higher than where the token is currently trading. So anytime you have a large treasury and the token and product may or may not be doing so well, you have this massive arbitrage, and people are going to be interested in taking advantage of that and creating some form of dissolution.
What was the Rook product itself actually working, or no? Like, was this?
Yeah, it worked. It works. It's a pretty interesting product focused on the MEV space. It's seen a lot of declines over the last 6 months, like their volumes through their like MEV protected mempool is down like 80% over the last 6 months, which is definitely underperforming other areas within the space, with most of like DEXs getting a rebound since November or 6 months ago when FTX blew up.
Okay, so what led to the dissolution then, besides volumes being way down?
A lot of it also had to do with the community not being happy with the team. So the team has been working on essentially a V2 upgrade, and they've been very, very quiet about it, claiming they've been under NDA. And they haven't released any form of roadmap and whatnot there. So it's been kind of a bunch of community not sure where the product is going, but promise something in the near future that's just hasn't come out yet. So that's one side of the issue. The other side of the issue is the budget that the team's been spending. So their budgets all go through governance, and they had a budget vote, what was it, like 2-3 weeks ago, where they were spending 6.9 million for the forward year. But where this gets interesting is that only 10% of salaries are paid out in Rook token. So it's definitely a drain on the stables and the treasury, but then also not a lot of alignment with the community in the form of the token.
Okay, so we had a dissolution proposal out there. You said it's a bad case of governance. What happened?
Yeah, so after the budget proposal, the next day, Rooks Labs, the team, released this idea that they called the incubator DAO. And what it would do would be $10 million would flow to this incubator DAO, along with governance rights of Rook to the incubator DAO. So essentially what that has done is a large portion of the treasury stays with the team. The team keeps all the IP. They get over the overhang of the DAO because the majority of the people in the DAO were unhappy for what we've outlined. And then the token holders get $7 million of stables, $3 million of more Rook, and they lose all of the upside in the product and all of the upside in the treasury. So after that happened, immediately following that, a dissolution proposal went out from a community member. And this was asking for shutting down the product, shutting down the team, giving everything back to Rook holders. As we mentioned before, the siphons that oversee the governance process immediately said that they would not be voting in favor, or that they would not recommend it and move forward with that. So that's about halfway through it. If there's any questions on that, Jeff.
So, well, I mean, just finish the story. I mean, so look, this was interesting enough to you to write about it. Like, where's the interesting part? I mean, obviously from a financial standpoint, it's interesting because the book value was around $44 per token. It was trading as low as $12. I don't know where it's trading now. Clearly so clearly there was a reason to try to extract that value, but other than just a straight book value play, like what happened during this voting process? What made this an interesting story?
Yeah, so it became really clear that the full dissolution just wasn't ever going to make it to governance, and it wasn't going to be able to be voted on. What made this interesting was returning to this incubator DAO as a form of a spin-off DAO. So where the process has really been over the last 2 weeks that we've watched has been community members negotiating with the team to get more of the money into the incubator DAO, which could then just be spun off, dissolved, and token holders would get their money. So where this final process has ended up has been the team gets about 1 year to 2 years of runway, all the IP, no overhang of any token, and all future revenues. The token holders get $44 per Rook. So from one investment standpoint, really interesting, but two, it's really create a new form of dissolution for some of these massive treasuries that are trading under book value.
So do you see this model being enacted in other places as well?
Definitely. In terms of teams that may be trading under book value, I think it falls down a couple rungs on some of the better options. If you're a team trading under book value, obviously the first thing I would suggest would do buybacks. And then two would be look at something like this to meet the community members in the middle. You still can build your product and not be fully dissolved, but the community members will receive significant upside back to where this token should be trading at.
Yeah, I mean, at the end of the day here, the big thing with these DAOs is, you can pretend all you want that you're not an investment structure, or you can hide behind regulatory, issues. At the end of the day, if you have a token, your token holders are not going to be happy if you don't do something to create value. Now, value does not need to be in the form of financial value. It is okay if your token trades significantly below the book value of your treasury, if you're offering some other value, maybe in the form of community, maybe in the form of some other member rewards. But you have to do something, right? What you can't do is just let your token holders die and claim that it's out of your hands, right? If you are a member of a DAO, you have a voice. Your tokens give you that voice. And if you are one of the founders and or leaders of a DAO, you have an obligation to try to create some value there. So with that in mind, I mean, what with some of the issues you wrote that some of the issues that led to Rook specifically getting to this point was poor equity and token alignment, awful regulatory environment, and just an overall poor governance structure. Of those, I think not a whole lot you can do with the regulatory environment, but certainly fixing governance structure, fixing equity and token alignment seems like it'd be pretty easy for other DAOs out there,
Yeah, definitely. I mean, we've continued to see both labs teams have equity as well as some form of token. And I don't think that's made a lot of sense to me. I've always been under the impression that if you are going to launch a token, it makes a hell of a lot more sense to dissolve the equity and replacement for the token. So their equity holders, team members are all and token holders and community members are all on the same level playing field. That feels like much better alignment than what we've seen with this equity token mismatch.
Yeah, we've seen that before. I mean, Uniswap did it the right way. Uniswap started with an equity raise, converted all of their equity holders into token holders, and effectively, while there is technically still equity of some entity at Uniswap, that entity really doesn't exist, and all of the work and potential future value, if there is any, would go to token holders. I guess DYDX would be the opposite, right? DYDX is effectively Grayscale at this point, where the owners of DYDX are getting fat and happy off fees while the token holders are getting nothing. It sounds like Rook was in that latter camp where the token holders were getting squeezed. So if again, if there were people watching this who are a member of a DAO or a token holder of a DAO or a creator of a DAO, like what would your parting shot advice be to them to clean this up and have more positive success stories for DAOs instead of continued failures and disillusion?
Yeah, I think part of it is really just outlining what a DAO manages, whether that be the treasury, knowing that if the DAO does manage the treasury, that there is always the possibility of a dissolution, but also what else that the DAO members can contribute to see the success in these projects. Like DAO members are very different than traditional equity holders for the most case, outside of maybe some activists, where equity holders are just holding for the upside or dividend or a sale or whatnot. There, token holders are much different, where they want to contribute their time. They want to be constantly in a Discord having communication, and they want to help out where they can, coming up with new ideas for products, helping build products. We've seen that all the time, where new community members become team members, or community members receive a grant and go build something that really benefits the project. So creating ways for that to be the case, it will be a step in the right direction, but at the same time, just realizing that there is still some obligation to create value. And I think that has been what has been missing over the past year from DAOs. And a lot of that I do think comes down to regulatory environment, but regulatory legal risk is just constantly a shield from a lot of these DAOs that we've seen.
Yeah, I think it's more of a crutch. I think people don't want to address it, so they lean on that regulatory shield.
Yeah.
To me, it's real easy. I mean, first and foremost, as you described, just make it very, very, very crystal clear into what, in fact, token holders have voting rights over and what they don't. Right? Make that super clear from the beginning. Then, at least as a token holder, you know what you have control over. Then I think it's cadence. I think it's ridiculous that you can have random votes whenever you want in a DAO. I think it should be once a month on the 13th of the month, we're going to have a vote. So if you have a proposal, get it in by the 13th and we'll vote on that. That way you have higher participation in voting because you know exactly, at X time every month or every 2 months, there's going to be a vote. So if you have an issue, put some thought into it and get it out there then. I think with a stricter cadence, I think it solves a lot of the voting issues. And then finally, I think it's real easy, which is you have an obligation to create an ROI. And again, a return on investment doesn't have to be a financial return. And if you are not delivering, if you don't have stated goals that you're going to deliver, that's a problem. And if you do have stated goals and you're not delivering, then you have an obligation to buy back the tokens. And it's that easy, right? Your tokens, if you are not getting some return, again, either financial or utility value out of your membership in the DAO, then that money that is sitting there should be either used to create value, which is fine, right? You don't need to worry about the token price if you're doing other things that benefit the DAO long term, or it should be used to buy back the token. I think that's a super simple fix, right? There is no reason to have massive treasuries and sitting there in cash if you have no idea and no plan on how you're going to utilize that money. So I think those are very simple fixes, and I would certainly urge any DAO members to be loud and annoying with the community members and the leaders of any DAO you're involved in. And I would say any creators and leaders of DAOs should adhere to that as well, because this is definitely a new social and entrepreneurial and governance ownership structure that should work. And it's kind of embarrassing that so many have failed to date. Well, great. Well, Alex, I appreciate it. Guys, if you want to talk more about DAOs, again, Alex has been the guy here at ARCA who has been on top of all of these. You can follow him on Twitter at crypto_Alex17. You can also find all this information on our website, again, at ar.ca. We'd love to hear a lot of feedback on whether that's Rook specifically or other DAOs, and see how we can help you or you can help us, or how we can sort of fix this, because I do think it's going to be a big part of the ecosystem going forward. And as frustrating as they have been, there is certainly a path to get these right. So that's it for this week, guys. I appreciate it. That's our 2 Satoshis, and we'll be back again next week. Thanks, Alex.
Thanks.